What is up, everybody? Logan here again today with another video coming at you. And today we had another effortless trade with our zero DTEs, which puts me up to 81 out of 84 on my last 84 zero DTEs. I'll take you guys over the entry guide, everything I did today, and a little mental thing as well with the markets in this current situation and environment we're in, and why I decided to go with the put credit side today. So right before we get into this one, I would appreciate if you guys left a like, comment, and subscribe. We're 7 subs away from 11,100, which would be an incredible goal to hit. So if you guys are yet to subscribe and you find value in these zero DTEs, make sure you do that here. And then let's comment below. Let's do the hockey emoji, whether it's the hockey sticks with the puck or the net, whatever you guys want to comment below. Just in general, I've been watching hockey a little bit more, so let's do that for tonight. And let's get right into this video. But if we hop over to the Discord and you guys can come trade with us, the link is below if you would like to. We have like the most members we've ever had, so it's been incredible. So looking at this today, which is our criteria, right? Zero DT checklist, expected move math is number one as always, right? So what I did here was I took a look at the EM low because what did the market do this morning? Well, it gapped down a little bit. And it wasn't a huge gap. It was maybe 20 points, right? Maybe like 0.5% down. Nothing too dramatic, too crazy. And even currently, with an hour left to go in the day, we are 4,000, like right around 4,000, nothing too crazy. But we had a really good edge this morning. And the first thing I did this morning was I started to look down at this 2% down range. Just wanted to make sure we're out of the EM low, right? But I had no premium down at 2x the EM low, which is like my bread and butter spot. So currently we went to the trade. If we go over to my trades, we entered the 39.20, 39.15 for 35 credit. Some actually got filled for 40, and I think one person got filled for 45. Then we took it off a few hours later for a 5-cent debit, collected our 6%. We'll move on to the next trade. But my criteria for this one at those strikes was just taking a look down here. And we were right around that 2% down zone, which is good 91% of the time. So I just zipped us up 7 points, which is probably about 90% in general. And that gave me a really good probability of this trade working. Now, with the EM being 46 and the EM low 39.47, this was about 1.5 times outside of the expected move for where I placed my trade, which is one of my favorite spots to place a trade. And what did the market do? Well, number 2 on our checklist is, was it a gap up or a gap down in the markets, right? Most of these gaps end up filling, and a lot of them do fill on the same day, which actually happened today. So after we slapped the trade on at about 9:33, right on this little 39.75 dip, we had a little move up, a next move down, and we were hanging out. And I know a lot of trades, right? Like the 10 a.m. trade is very popular. It's where whatever direction you were moving likes to swap over at 10 and 10:30, right? And then look around that 10:30 mark. We started to chop a little bit more, but had that really nice follow through to fill the gap. Now, we were down to 10-cent debit. Some people hopped out there in less than an hour. Chop fell again. You're able to double dip here. I didn't double dip. I just went in with my normal sizing. And then on this next move up, everybody was able to get out around noon Eastern time. And then we had that nice little push. Now we're pushing back down. So overall today, the market's just down 4 points as of me recording this video. So that gap filled. Did we have a gap down? Yes. And what was our expected move math? We're both really nice today. And even the volatility index has actually been down quite a bit if we take a look at the VIX. So the VIX is still pretty low, right? Like 23.42, and we're still getting really decent credit far away outside the expected move. Because I had a lot of people in the comments before saying, oh, this strategy might only work when the VIX is at 30 or 35 or the high 20s. We've been in the mid 20s, like the lower to mid 20s, like 23.44, which is a really solid spot. If you look at the last 6 months of the VIX, that's a pretty low spot. Like we were down, we were still doing well with these down when the VIX was 20. Now, granted, if the VIX is like 16, these might be a little harder to get like really good fills on. But overall, really solid strategy throughout all of this volatility. So a lower VIX had me expect just not very much movement today, which is exactly what we're seeing, right? So did we exceed the EM on Friday? No, we did not exceed the expected move on Friday, but we did on Thursday. We have seen the TOS charts, of course, as well. I could pull those up later. The position sizing, like I said, it was a normal day. Super nice. Trade timing, we got into this right out of the gate. And the reason I did that was because we gapped down and we gapped down into that support zone. And that's the other thing, too. Like mentally, when you're in this market, you got to think that all those people who put that money in when we were, because this gap's still open, by the way. So down at 37.48, all of this money that has come in is going to create a lot of FOMO to the upside where people feel like they missed out on the move and this thing's going back to 4,200 or 4,400. Like that's how they're mentally thinking right now. So if you just use other people's emotions to help your trading and you can go with the crowd, especially when you're selling credit spreads, it'll be super beneficial, right? And it's not like you're manipulating anybody. You're just playing off of how people feel, right? Like, because that's a big decision maker when it comes to trading the stock markets, is how a lot of people feel. They see green, they feel like they have to buy. They see red, they feel like they have to sell, right? Which to me doesn't make very much sense because I've been in this mind frame of like, how can you use other people's emotions in the market to trade off of? Because I've spent so much time shorting stuff that's been overbought and going long when stuff is oversold. So I look at it more as opportunity. But a lot of people can't help it. They feel like they have to get in. They feel like they've missed out. Some people regret stocks they didn't buy 10 years ago. So you can use that to your edge, right? And overall, this market is trending upwards based on the recent information with CPI and all the money that's come in, right? So people feel that FOMO. They feel like they've missed that 5% that their portfolio could have gained because they sold before CPI and they don't want to miss any more. Actually, I think this is a trap, but overall, like I don't want to get into the details, but this is an open gap down here, and at some point, I think it will fill. So that's SPX, right? Just wanted to show you guys the price action there, and that's my mindset when it comes to now trading this week, is to be very aware of just the situational awareness of the market, that everybody's itching to be bullish. So be bullish, but cautiously bullish, right? And just know that there's impending doom below for that gap fill. I just don't know if it'll fill this week. I think there's a good shot we get a little bit more of a push, maybe to 40.25, maybe to 40.50, even possibly 4100 before we get the next leg lower. But we'll have to see, of course, right? Like that's just my thoughts and my thesis. I still think the economy's bad and inflation's still very much out of control from a macro sense, but I'm just trading the price action of the day anyway. So back to the expected move chart. Like I said, I like to put myself here, and I get many questions about this minimum credit chart. This is if you were to just play off the probabilities and no other setup. This is just if you were like, hey, my trade's going to win 91% of the time, and when it doesn't, it goes to max loss. That was the minimum credit you would need to be profitable doing that strategy. So I get that question quite a bit. But yeah, I just wanted to go over that really quickly with you guys. And here's the trade sheet for the last few trades. And I continue to update this, but it's just the strikes, what we collected. Did I hold the expiration? Yes or no? And then was it a put credit, call credit? How much did I keep? And what percent return on my collateral? So this is that sheet, and I continue to update it every day. And Vance and I are actually going to make a really nice decked out one. We just haven't had the time to get together and update everything. And hopefully this week I get them back on the channel. So it's been really nice lately, but that is pretty much everything, right? I showed you guys how I chose the strikes for today to continue my high win rate with the good streak. My risk management, my whole thesis was if we break that EM low, right, which is that 39.47, if we were to break that, I would start looking at potentially managing the trade. But overall, I didn't expect that just because we were right at 4,000, that big psychological number that a lot of people expected us to hover around. And just the overall FOMO of this market should continue to drive this up at least today and probably into tomorrow. But we'll see, right? We'll see what the market ends up giving us this week. But that is going to be everything for me in this one. I hope you guys got some value out of this video. I have been doing mentoring. If you guys would like to come and learn from me a little bit more, if there's something that you maybe aren't fully grasping in the video, or if there's something else in your trading. So of course, you guys can email or comment below about the mentorship. And like I said, if you guys want to come trade with us in the Discord, the link is below. But that is how I chose my strikes today. Just continue to size properly. And it's really easy to manage your emotions when you size properly every day and don't get greedy, because it's building a portfolio is like growing a tree, is like what I like to tell people. Same with investing in stock, right? It's like, when was the best time to plant a tree? 20 years ago. When is the best time, or the second best time? Today. So that's my opinion, is like just stacking these wins day by day. Your portfolio will grow at a rate that you just won't believe, because you're so consistent. So that's going to be everything for me in this video. I appreciate all the support as always, and I will see you guys in the next one.